Hey everybody, this is RC Peck with my weekly, I think I need to just call it my weekly communication with you, whether it's a video or text or something else. It's a weekly kind of touching base. And if you notice me getting mad or getting mad at people who have bigger platforms, you should trust your instincts because I am. And one of the things that I hear repeatedly when I talk to people who are curious about my training, and I just heard it today, and he said it pretty clear. He goes, look, I just don't know who to follow. I just don't know who is right. I just don't know, fill in the blank. Both sides are credible. I like both sides. One side says we're going higher, one side says we're going lower. So how do you do this? And you have to understand this too. The person that I was talking to has been involved in the markets for decades. But since we're not trained to filter investments in a certain way, it becomes very hard for our brain. We're actually taught to follow people we like, right? Follow people we already have a bias in believing. If you think gold's going to $10,000, you're going to buy a newsletter of someone who thinks gold's going to go to $10,000, right? This is the way the brain is designed. So I wanted to bring up a quote. It was actually an email that I got on Friday, November 2nd. Yes, it was November 2nd. And it basically was like, well, the bull market's coming to an end, or the bull market is starting to slow down. And I just thought, gosh, this guy's got a huge platform. His name is John Mauldin. He is well regarded. He does not come across hypey at all or bullshitty. But then out of his company, Mauldin Economics, he says something like, well, the bull market's slowing down. And there are people who follow him, and there's people who believe that if he says it, or if one of his publications says it with his stamp of approval on it, then they actually believe the bull market is slowing down. But what does that even mean? And how do you check that? And how do you verify that? So I want to show you a couple things. And what I'm going to show you, it gives you an idea of how our brains are so easily hijacked when we have not trained them to filter out biases, even if it's our own, and to let in those rare but important signals so we can really have rapport with our markets, right? We want to be in rapport with the stock market, right? We want to be aligned with the stock market. And a lot of people are taught to be out of rapport. And it's kind of weird for me to say rapport, isn't it? Because you think of rapport as how you connect with other people. But people, A, don't connect with their own money, let alone the stock market, and they're really out of rapport. So I want to go straight at this thing that John Mauldin, John Mauldin Economics came out with. And again, this happened this past Friday. And I want to be super clear about the date. It was actually November 1st. So we appear to be reaching a slowdown in the bull market. That came from John Mauldin Economics. So here we go, guys. Let's talk about whether this is true. On the screen here, you have the S&P 500 at new lifetime highs. Never in the history of the U.S. stock market has the S&P been higher than it is now. Okay, let's go on. Is this consistent? We have the Dow Jones. The Dow Jones is at new lifetime highs. Again, what John's publication wrote was we appear to be reaching a slowdown in the bull market. I don't think slowdowns happen when the Dow Jones is making a new lifetime high, not a new 52-week high, but a new lifetime high. The next thing I'm going to look at is the NASDAQ via ETF QQQ, right? That is at a new lifetime high. Now, I got this email Friday after the market closed. So these price charts are Monday with the market open. But even before that, these were making new lifetime highs. But let's go on, right? So here we have the financial sector. The financial sector, which has been underperforming greatly for a very long time. But look, it is making a new lifetime high, right? So if the financial sector is breaking out and up to new lifetime highs, that's a sign of strength. That is not a sign of weakness. Please write that down. And then we have the industrial sector of the U.S. stock market. That is breaking to new lifetime highs. A new lifetime high is not a sign of weakness, and it's also not a sign of slowing down. The next chart we have is the technology sector, which is at, wait for it, a new lifetime high. Right, so far we have the financial sector hitting a new lifetime high, the industrial sector making a new lifetime high, and the technology sector making a new lifetime high. Now, some people say, well, if value stocks are making a new lifetime high, that's not a good sign. But stocks going higher is never a bad sign. So here we have on the screen the S&P 500 value ETF making a new lifetime high. So if we're reaching a slowdown in the bull market, we're having a lot of sectors make new lifetime highs. But it gets even better. Here we have the Global 100 ETF, right? So this is kind of a neat ETF that looks at the 100 largest companies on the planet, and it is making a new lifetime high. And let's kind of keep going here. This price chart is a price chart of Europe. Now, Europe's the largest economic bloc on the planet, right? We often talk about, or people often talk about the US being the largest economy, China being number 2. But as far as economic blocks go, Europe is way ahead of the US and China. Now, Europe as a group is not yet making new lifetime highs, but it's about, let's just say it's at about $68, and let's just say its lifetime high is at about $71.50. So it's about $2.50 away from its lifetime high, and has been cruising higher for 11 straight months. And I'm not that big into 52-week highs. I like to see lifetime highs, but this is clearly at more than a 52-week high. So we have Europe also cranking higher. When we drill into Europe, we have the DAX. This is the German index. So this is in local currency. This does not include, this price chart that I'm going to talk about here does not include dividends. It's just the raw price part of it. But as your brain can see, it is making new 52-week highs and is not that much below lifetime highs itself, right? So that's the DAX. Now, Germany is the 4th largest economy on the planet and is really the economic engine, or one of the biggest, well, it is the biggest economic engine for Europe. But then you go and look at France, the CAC 40. That is at new lifetime highs. France is at new lifetime highs. And this is the index, the CAC 40 index, meaning it does not include dividends. So if we had a price chart that included a total return CAC 40, then we'd see it even making new lifetime highs earlier. But the French stock market is at new lifetime highs. Okay, let's keep going. Okay, here we have the Swiss stock market. Now, what's interesting about this is Switzerland's kind of the place you go when you're really, really concerned, right? You put your cash there, or your coins there, or you buy some gold, or you bury it, or fill in the blank. But the Swiss stock market is at new lifetime highs. The Japanese stock market is not anywhere near new lifetime highs, okay? Because that happened in 1989. But what I want you to most get from what the Nikkei is doing, first it's the index, is it is nearing 5-year highs, right? It's not falling. It's not going sideways. It has been moving up since December of 2018. It is moving up and to the right. So the Japanese stock market is moving higher, right? Then here we have the Hong Kong stock market. Now I'm showing you this with an ETF, EWH, but Hong Kong is supposedly burning, and there's 2 million, air quotes, kids in the streets protesting China's rule over Hong Kong. As a reminder, Hong Kong is a 2-party system, one country, 2-party, that happened in 1997. In 2047, 50 years from 1997, it will go 100% under China rule. But for 50 years, it's called a 2-party system. So if there was a country that should be getting crushed, you'd think it would be Hong Kong. Now, guys, I was an Asian studies major. I lived in Southeast Asia for a long time. I know Hong Kong is not a country. But the point is, it's a major hub for the world, and it is breaking up. It's not to new lifetime highs yet, but again, it's not falling. Let's keep going. Here we have Brazil, right? Brazil, which is kind of the bellwether for South America. It is not yet at new lifetime highs, but literally it's about 4% off lifetime highs, which happened in July of this year. Again, this country is not going sideways and it's not going down. And I say that from a stock market point of view. So we have yet another piece of evidence that when you hear someone say we appear to be reaching a slowdown in the bull market, by the way, that is in regards to stocks, right? That is in regards to when John Mauldin Economics, and when his newsletters say that or said that on Friday the 1st, that was in regards to the stock market is now slowing down. Let's keep going, guys. Here is the largest bank in the United States, JP Morgan. And I want to put this in there because I ripped Jamie Dimon in one or two blogs ago that he really should just stay focused on managing JP Morgan and leave the predictions to the stock market and the bond market and the fixed income market and the currency market and the commodity market. But here we have the largest bank in the United States, and it is making new lifetime highs, right? So when you have the largest bank in the US making new lifetime highs, you have to start questioning, if we appear to be reaching a slowdown in the bull market, why is most of the world breaking out to new lifetime highs and new 52-week highs and getting within low single digits of new lifetime highs? Why do you have a JP Morgan, the largest bank in the US, clearly broken out? And by the way, it didn't just break out to new lifetime highs. It broke out to new lifetime highs, let's call it 3 or 4 weeks ago. And then lastly, I'm going to leave one more chart with you. This is what's called the common stock advanced decline line. So this is stock only, and this is an indicator that looks at how many stocks are advancing and how many stocks are declining. And guess what? It's at a new lifetime high. So we have markets all over the world, just not in the US, going up and to the right. Some are at new lifetime highs, like France. France is the 5th largest economy on the planet. Not bad, considering it's bordered with the 4th largest economy on the planet. So we have all these price charts. We have all these indexes or indices, right? We have these 400, 500, 600, 700 million people voting, right? The bull market isn't slowing down. From what I just showed you, it's hitting its next stage, its next phase. And this runs counter to if you have been taught that you need to tune into the news cycles, that you've been taught to time or trade, right? But what you'll notice is when you train your brain to filter out the noise, train your brain to filter out the noise. When you train your money to get aligned with the market, what happens is you sleep better at night. You can tell, you can see two people and go, I like them both. One says it's going up, one says it's going down. Well, how do I know? Like, what are the steps I can do? Right? Because people are caught between, well, I like him and I like her, or I like her and I like her, I like him or I like him, right? They both sound confident and they're saying opposite things. And part of it is because we've never been trained to know what signals to follow. And this is just kind of a little bite to help you guys, grow your money. It's really to kind of give you that insight to say there is a better way, right? There is a better way. And I've shown you this image before, and it just, everything that's going on in the world, whether it's politics or large tech companies, right? There's billions and trillions of dollars behind these companies, right? Wanting to pull your attention over to the sparkly thing they want you to click on. And even if you don't think it's affecting you, if you don't have that filter turned on, if you haven't trained that filter, the overwhelm is coming from the newsletter industry, right? And that big box advisor world. So thanks guys for being in my world. if you find yourself saying, there's got to be a better way, there's still this lack of confidence. And now that I'm in my 40s or 50s or 60s or maybe even 70s, right? I've got to figure this out. If maybe not even for you, but for your kids and your grandkids with the money that you have put away. The answer's on the other side of training. So guys, thank you so much for being in my world. This is RC Peck, and this is just another step in helping you protect your portfolio, sleep well at night, and just know that there is a better way. Until next time,